All right, welcome back everybody. In today's video, I'm actually going to be breaking down to you guys one of the biggest mistakes that I used to make in my early journey and how I corrected that to actually start consistently getting winning trades like you see live on my streams with you guys. All right, and just overall breaking down the trade that we took live. So first and foremost, you can see that I always take my trades on the 1 minute chart, right? You're always going to see my executions like 99% of the time on the 1 minute chart. That's where the best entries perform. And it's been that way since the 6 years I've been trading, okay? Now, not only did I take this trade right here, but if we actually go back to earlier in the week, how damn similar this trade was to the one that we took obviously later on in this week. So if you didn't watch the review on January 6th trade, go ahead and do that. And then watch this one that I'm giving you today and you'll see the crazy similarities. Now, while the 1 minute chart is so good for entries, I'm never actually just scaling right down into it without the higher time frame narrative, right? So let's go ahead and back out and give you guys the full picture on this. All right, guys, so out here on the hourly chart, okay, I just want you to immediately take a look at overall market structure and order flow and just tell me, what do you think the market is right now? Obviously, from my viewpoint, like the market's clearly still bullish, guys. Like, yes, it is like in a range technically, right? But ever since we opened up, right, on December's monthly candle and then obviously created this low, it's been all bullish. We rallied, retracement, created the intermittent term low here, came up off of that, rallied, right? We had another retracement, creating another intermittent term low, further solidifying bullish market structure, and we're continuing higher. And we still have this quadruple top right above here, guys. So we still have obvious stacked highs resting above, right? So if I know that, I'm still going to be favoring longs and not trying to pick the top, especially when we have this obvious highs above us and we're still in bullish order flow overall on the higher time frame. So looking at the hourly time frame here, right, we're coming into a week where, again, we started the week off by rallying. We already retraced against the grain, so we already did a lot of damage heading into today on Friday to the downside. So again, this is giving me more confidence that I'm not going to be leaning on shorts. And even if it did lean on shorts and started getting really aggressive, I would have adapted to that, right? And not try to pick longs. Vice versa for here today, not trying to pick a top. So we head into the session, we open at midnight, and look at all the damage that was done below this midnight opening price, right? The daily opening candle. Huge wick down below midnight, huge wick down below midnight again, creating severe damage to the downside, which is enticing breakout artists lower, right? And also accumulating more long positions, right? Now that they're doing the damage down here, to then send us back up higher towards the draw that I talked about up here. So going to the 15-minute time frame, you see it clearly here. Damage done below the midnight opening price, and then we have 8:30, which is our news release. Okay, I'm only going to focus on 8:30 a.m. instead of 9:30 when it's a big news event like non-farm payroll. So we open up at NFP, smashed back down below midnight and 8:30 opening price, and then we rally towards what? Old key draws. Remember, this was our Model 4 target. And then here is the old January 7th high. Huge aggressive bump towards those draw and liquidities, after we already done the necessary damage to the downside. So I'm already knowing we're done. We're good. All we're going to do is keep on going higher today, and it's going to knock out anybody that tries to pick tops. Here's when the fun part begins. Technically, there was a model number 3 that performed right here at 10 a.m., but I simply missed it. I wasn't a fan of the deep manipulation, so I waited for a potential continuation on a Model 4 basis, and we did indeed get that. We rushed to the upside, just like that. We smashed the whole way back down again. All right. And here it is. Your Model 4 gap. Okay. This is a 15-minute fair value gap. As soon as we tap down into that, I'm now watching this on the lower time frames for my confirmation entry. I already have everything that I need at this point, guys. We had our manipulation below midnight and 8:30 opening. We had our clear change of state delivery, which was right here. Okay. See these solid body 2 down candles that took us below the midnight opening, right? We shifted above that. That's your clear change of the state delivery. We have higher time frame order flow and market structure on our side. We have obvious high quality old highs resting above us, like right here. And if you go on your lower time frame, you'll see that there was a triple top on the 5-minute chart here. Now it's just time to scale down. All right, so again, here was your Model 3. We had the light bulb expansion off of a key time-based old low right here, right? Multiple fair value gaps, 1, 2. Then you had your retrace, and I missed it. And then we rushed to the upside towards all this obvious stacked highs here. But did I chase random momentum based on emotion? Let emotions take the steering wheel? Nope. Guess what would have happened if I did so? FOMO candle of death. This is the FOMO candle of death that always sets up a model for continuation. The FOMO candle of death is a large sudden move to the downside against a bullish rally, right, to fake people out and take out the FOMOers that chased all this momentum here, early buyers. When will the FOMO candle of death be done doing its damage? Well, usually when it reaches a model 4 gap, and that's exactly what it did here. It reached the model 4 gap, and as soon as it did that, that's when I was looking to hunt. So what do? I look at the next nearest hourly candle opening, and it just so happened to be 11 a.m. right here. 11 a.m. pops off. What do? Boom. Was this like slow, sluggish, and tiptoeing around this move up? Nope. It was really light bulb. It was fast. It was assertive. And it created 3 gaps as it rose up. With all the other boxes getting checked off on the checklist I made for you guys, this is the final piece of the puzzle. We have a time-based expansion, right, with 11 a.m., creating the multiple gaps. The first retrace into any gap, okay, I don't need these lower ones delivered. That's when I'm going to be taking my long position. Where does the stop loss go? Well, the OGs know this by now, but it goes right here. Take profit at the nearest model 4 target, right? Why is the stop loss down here? It has to cover all gaps, okay? Basically just covering at least 3 key levels, all right? 3 key levels, and that is going to be a valid stop loss where, you know, you're not going to get stopped out just for it to then go to your target, right? You can't just slap on random stop losses, guys. It has to be systematic like I'm teaching you right here. Now, why was this the model 4 target? Well, very, very simple. All it was the lowest hanging fruit key area of liquidity in a bullish market, right? So let's scrub over and take a look at this. Okay, this was from January 7th. You can see that these were all generated at 2 o'clock. Okay, 2 p.m. It's just a very smooth, obvious top, right? Quadruple top. But inside of this quadruple top, if you look at your hourly chart, you'll see how there was also a gap right here. So in a bullish market, all I'm doing is just going for the lowest hanging fruit, right, to take majority of my profits off of at a key area of inefficiency or liquidity. In this example, this had both. So I knew that was a good profit taking area. All right, guys, I had to come in here and add this in real quick. I almost forgot, okay, but it's so important, okay? Don't be the guy, like, how do I have such a high win rate? Because I'm never the guy that tries to be the genius, right, and picks the top and bottom ticks and top ticks. All that stuff is ego trading, okay? So, for example, let's say, oh, I want to come in and, oh, here's a sweep on liquidity, and, oh, here's a break of structure below this swing low. Oh, the market structure shift, baby, right? Oh, and then what do you have it? There's a gap in price right here. Let me go ahead and trade this and try to short and pick the reversal. And then you get stopped out and wonder why, because you're trying to pick reversals and trade a 2022 model that doesn't work, in my opinion, in a clear bullish market. Okay, if you want to have a high win rate and a high strike rate like you see me have, stop trying to pick these fake reversals, right? If it's truly going to reverse here, it's going to let you know. Like, it'll be really fierce. It'll probably retrace, and then it'll just like completely blast through all the opening prices and probably create, you know, a continuation of some sort, okay? But don't be the guy that always tries to pick the top. This is a mistake that I used to make, and that's why I used to have not the results that you see here today. Stay in sync with the order flow. Okay, stay in sync with the higher time frame market structure. All right, you don't have to fight the trend. You don't have to ego trade. Stay in sync with the market if it makes logical sense, like it made sense here right at 11:04 a.m. We already did damage against the FOMOers and everything else that I explained inside of this session. Now, really at this point, unless you're overcomplicating it, the last part, you know, significant part of this trade here is, oh, what about this right here? It created another expansion. Here's a gap. Right? Can I enter right here? The answer is complicated because while technically it's still valid because our target still hasn't been hit, you're just going to have a wider stop loss. Okay, you're going to have your stop loss down below here, and you're going to have majority of your profits taken off at the model 4 target. And as you can see, we're slightly in negative RR. So you can take these late entries, honestly you can, Okay, but the only thing is you're just going to have negative RR winning trade. So it's not chasing unless you buy this and then have a tight stop loss, right? Because you're probably just going to get stopped out, right? Because you got a late entry and you're trying to have a tight stop loss to cover up the fact that you got in way too late, right? So yes, you can take these later entries if they give another retrace, but again, you're just going to have to accept that it's going to be negative RR. So that pretty much does it here today, guys. I'll see you next week for more live sessions where we implement this live in 4K. And I hope you guys take care of yourselves. See you in the next one.